close the door, please. Settle down. Yeah. Settle down. Open your book. Yeah, fast. Yes, yeah. I'm audible, right? I'm audible, yeah? Yeah. Okay, good evening, everyone. To introduce myself, my name is Dhanesh. Okay, I'm a qualified chartered accountant, cost accountant, and company secretary. Okay, I'm a triple qualified professional. Okay, I'll be taking your accounts class. I was on leave till yesterday, so Binita ma'am has taken the class, right? Yes? Huh. So accounts, so far what she has covered? Anyone? We have 5 offline students, 1, 2, 3, 4, 5 online students. Okay. 1 second. Samudra Nilav Borwa. Can you hear me? Yeah. Jayashree Datta.
Yes, sir.
Reema Das.
Yes, sir.
Rakesh Sharma.
Yes, sir.
Susmita Bose. Susmita?
Yes, sir.
Yeah. Your name? You quickly introduce yourself. Vikash. Deep Jyoti Das. Tanuja Kumari. You're from South? No. You? Binitha Bawal. You? Lakshmi Devi Chetri. You are from South? No. Lakshmi South. I thought South. Okay. Yeah. So far we have covered. Anyone? You are telling something? So far we have covered. The earlier lecturer has covered what topics? Can you? Provision for debtors. Okay. Provision for debtors, I guess, is the last chapter of chapter 1. Last part of chapter 1, I guess. So you are done with chapter 1. Okay. I need to start from chapter 2, yes? Sorry? No problem. Okay, let me just summarize the whole first chapter once. Okay. Okay, and then I'll go to chapter number 2. If you have any doubt, just stop me. Okay, I'll clarify your doubts and then I'll move forward. Okay? And agree with the deal? Yeah. Accounting. Procedure of accounting. What is accounting? Anyone accounting? Okay, I would say business language. Do you agree with me? Yes? Yes? Business communicates with the users via accounting language. Yes? This is all about business language. I would say business language. Okay? What is accounting? Generating financial information recording. What is this recording? Recorded via? In the books of accounts. Recording of transactions is called what? Journal. Very good. Classifying, what is this? Ledger. Very good. Summarizing? Not different statements. I would say summarizing is trial balance. What is this? Trial balance. Okay. And then using this financial information, how? The accountant analyzes this trial balance, interprets, analyzing on interprets in the sense, more or less same meaning. Okay. Communicating in the sense by the way of financial statements. What are the different financial statements? Anyone? Balance sheet. You should not start with balance sheet. Okay. You should start trading account. Very good. But yes, very good. Who is this? Joyashree Datta. Good. Okay. Yes. Trading account. Before trading account, we have another account.
P&L.
Sorry, not P&L. I would say, you can say companies can be divided into several types. Yes. I would say manufacturing companies. Yes. Non-manufacturing companies. If you have manufacturing companies, you will have an account called manufacturing account. Okay, where the total cost of production is determined. Okay, and then manufacturing account, you have trading account. What is this? The goods which are manufactured, they had to be sold. Yes or no? Yes. So trading account, where you sell the goods, where you see the purchases amount, where you see the gross profit. Yes or no? And then you have P&L account. Yes. And then balance sheet. Very good. And then any other cash flow statement. Very good. Any other thing? Yes. You can assume till cash flow statement in your syllabus. Okay. Okay. Yeah. Can anyone repeat this financial statements once again? Order. Manufacturing account, trading account, P&L account, balance sheet. Very good. Using this financial information is communicated. I mean, I said this is a business language, communicated via financial statements. So if it is a trading concern, you start with trading account, P&L account, balance sheet. If it is a manufacturing concern, manufacturing account, trading account, P&L account, balance sheet. Cash flow statement is common. Clear? Okay? Identification of transaction. You know all this, right? Posting, recording in journal, ledger. I guess this has been covered. Preparation of trial balance. This has been done or not? Done? Trial balance covered or not?
Covered.
Covered. Okay, very good. Okay, if you are absent in that class. Okay. And then preparation of financial statements. You have drafted the trading account, P&L account, balance sheet. Yes. Till here it is done? No. Okay. So till where it was done? Till trial balance. Okay. Okay. Which topics? So no one is, I mean, any regular student who can say, I mean, yesterday's class, what was covered? At least, I mean, last class? Provision for debtors. I mean, bad debts, everything, right? Provision for bad debts. Okay. See this? Journal, ledger, trial balance, manufacturing, trading, P&L account, balance sheet. These are the communicated via financial reports. Okay. I think these concepts, you have covered this concept. Huh? Entity, money measurement, periodicity, accrual, all these, yeah? Okay, very good. Business entity concept. Yes, separate. I mean, the business and the owner are separate. In the books of accounts, both are different. Okay. Dual entry concept. Done, right? Okay, very good. Conservatism. This is one concept. No. Okay, I'll explain. Conservatism, or you will call it as doctrine of prudence. Sir, what is this? As an accountant, you have to account for all possible losses which will accrue in the future. Okay, suppose you know that in future I am going to incur some loss. Okay, say for example, I'll give an example. Suppose you sold some goods, okay, on credit. Okay, then what asset you will, I mean, in books, what asset do you record? Credit sales. What is the entry? Credit sales. Credit sales. Credit sales. Very good. Debtors account debit to sales account. Sales is an income account as per golden rules of accounting. Yes. Debtors is an asset. Yes or no? Cash is yet to be received from the debtors. Yes. That debtor, say for example, one of the debtor, okay, 31st March 31st March is the date where you, till that date you prepare the books of accounts, yes or no? Okay. On 31st of March, you came to know that one of the debtor has been bankrupt. Yeah, that you call as bad debts generally, okay? He is not bankrupt, but he is about to be bankrupt, okay? Because he is not paying any person, okay? He might be taking goods on credit from different organizations, but he is not paying anyone. Yes. So this is called, I mean, you know that he is going to be bankrupt. Yes or no? So account for all possible losses, future possible losses. If you know, that's why you have this provision for bad debts. Understanding? Account for all possible losses, but not for gains. What I'm telling, but not for gains. You might have paid some lottery. You know that you might win the prize. You should not account any such income. Understanding? Be conservative. Only account for possible losses, but not for gains. This is the conservatism concept, or you call it as doctrine of prudence. Clear? AS2, we have one accounting standard 2. In that we value the inventory based on this concept. Cost or NRV, whichever is low. This valuation is based on this conservatism concept. I'll cover this in AS2. You need not worry, okay? But just understand this part. Any doubts in conservatism concept? No? Yeah. Capital expenditure, revenue expenditure. You know the difference? Capital transaction, revenue transaction. You know the difference? Sorry? Basic idea. Yeah, no problem. What you know, you can tell me. What is a revenue transaction? What is a capital transaction? Sorry? Okay. Long term, very good. Long term and short term. I want that particular word, long term and short term. Revenue, you can say within this financial year. Expenditure incurred within this financial year. Say for example, rent paid for that particular year. You call it as a revenue expenditure. Okay. So what is capital expenditure? I purchased an asset. I purchased a building. Okay. That building I'll purchase in this financial year, but in this financial year only I have purchased it, but it gives me benefit for more than 1 year. Yes or no? In her words, long term. Yes. So the long term transactions or long term expenditure, I would say capital expenditure. Short term expenditure, I would say revenue expenditure. Similarly, revenue transaction, capital transaction. You can distinguish. Yes. Purchase of an asset is a capital transaction. Rent paid is a revenue transaction. Understanding? Yeah. Capital receipt, revenue receipt. Same, similarly. Yes. You sold an asset, capital receipt. You are selling goods. Yes. Goods versus assets. Do you know the difference? Yes. What is the difference? Goods. You are correct. You partially correct. You. Anyone? You? No problem. What you have in mind, you can tell me. No issue. Goods, basically, we trade in goods. Yes or no? We sell goods. We purchase goods. I mean, non-manufacturing entity I'm talking about. In case of manufacturing entity, they manufacture the goods, they sell the goods. Yes. Goods, assets, on the other hand, we use these assets to purchase and sell these goods. Yes or no? Suppose building. Yes. Say for example, there is one, say for example, Oil India Limited. Okay. It is producing petrol, diesel, etc. I mean, it is I mean taking the oil from the ground, yes, yes, in layman language, and then it sells the oil, yes or no? To sell the oil, they need some building, yes or no? So they are using the building to sell the oil. Oil is called goods, building is called asset, yes or no? Yes or no? So they have some machinery for drilling machinery. Drilling machinery is used to drill the oil, yes or no? Drilling machinery is the asset, oil is the goods, yes or no? Yeah. So using these assets only they can do the business. Okay, that is the difference between goods and assets. Clear? Huh. This is the whole accounting cycle. Yes. Identifying transactions. Okay. Identifying transactions. Recording in journal. So what is this transaction? Yes, which can be expressed in financial terms. I can say which can be expressed in financial terms. Suppose in the business, the person has given some order via phone. Okay, tomorrow I need some 5,000 laptops. Suppose I am doing laptop business. I'm selling laptops. I have given order of 5,000 laptops. This is a transaction or not? I did not pay the cash. I've just given the order. No. So this is not a transaction. So you have to identify the transaction first. Understanding? Indirectly, which can be expressed in financial terms, you have to identify the transaction. Not every event occurring in the organization, you can call it a transaction. Everything which is occurring in that business, you need not record. Yes or no? So you have to first identify. Clear? So this is you have to identify the transaction and then you record it in journal. Yes? Journal date, particulars. Yes? What is the next? What is the not directly amount? Ledger folio. Ledger folio, not journal folio. In journal you get ledger folio. So what is this ledger folio? Page number. Yes. In journal you record the transactions, daily transactions in order, yes or no? Say for example 1st of January, 2nd of January, 3rd of January, yes? Yes. Ledger folio is nothing but the page number of the ledger account where you have ledger. Ledger is a different book, assume journal is a different book, okay? Date, particulars, ledger folio, then amount, you should say debit amount in rupees. Okay, credit amount in rupees. This is called journal. Yes, yes. You record the transaction, some account debit, some account credit. Below that, what do you have? Say for example, credit sales, debtors account debit to sales. Very good. Narration. What's your name, ma'am? Binita. Very good. Narration. You have to write the narration. Narration is nothing but you are summarizing the transaction. Yes, being goods sold on credit. Yes, this is called narration and then a line below. This is the whole journal. Yes. Here we have two accounts. What are the accounts? In this entry we have two accounts. What are the accounts? Sales account, very good. Debtors account. So you create two ledger accounts. Yes. Ledger accounts, sales account, debtors account. Yes. Debtors account debit है, so debit में two sales. Yes. Sales account credit है entry में, तो by debtors account same amount. We have recorded the journal, we have posted in the ledger. Yes. Clear till now? Any doubts? I'll take a pause for 1 minute. If you have any doubts till now, you can ask me. No? No? Yeah. Posting to ledger and then drafting this unadjusted trial balance. I am calling it as unadjusted. Okay. So similarly, you will have several transactions in journal. You will post all these into ledger. Yes. At the end of the financial year, I am telling 31st March 2024. You can take 2024, okay. So from 1st April 2023 to 31st March 2024, you might be having several transactions, okay. You have posted all these into ledger. Now in the you have several ledger accounts, say 50 ledger accounts. Yes, yes, ha. Some ledger accounts might be having debit balance, some ledger accounts might be having credit balance. Do you agree with me? Yes. What are the accounts that will be having debit balance? Assets, very good. Expenses, very good. Drawings, very good. Now coming from trading account, tell me. Yes, purchases, very good. I purchases, opening stock, yes. Stock is an asset, I would say, but in trading account you take it to opening stock. Okay, that is called opening entry. Opening entry. That is called opening entry, because last year's closing stock is this year's opening stock, yes or no? So last year books are all closed and the assets and liabilities are transferred to the next year via opening entry. Okay, so last year books are, it has to be closed, yes or no? So assets and liabilities are closed via closing entry, taken into the next year via opening entry. Clear? So opening stock, I would say opening entry, not expense. Okay, then you have purchases, then less purchase returns, very good. Okay, purchase returns is which balance? Credit balance. Purchases is debit, purchase returns is credit. Okay, so instead of writing on the credit side, you are writing less. Understood? Okay, then sorry, cash is balance sheet. I am talking about trading account items. What all accounts do you have? Sorry, one second. Let me check if I have this format here. This is the trading account, right? This is the opening entry, yeah. Purchases, direct expenses. What are the direct expenses? Freight, carriage, customs, insurance, wages, gas, water and fuel, factory expenses. These are all direct expenses. What are these? Direct expenses. So all direct expenses are will have which balance? Debit balance. So all these will have debit balance. He mentioned expenses, so I am telling trading accounts or direct expenses. So all direct expenses will have debit balance. Clear? These are direct incomes. Yes. Sales is nothing but you're selling your goods, okay, which is your main income. Yes, so you should call it as direct income. Okay, less sales returns. Closing stock, this is closing entry, I would say. You can call it as asset. Okay, then P&L account. See the different accounts here. Salaries, office rent, printing stationery, telephone charges, postage, telegram, insurance, audit fee, legal charges, maintenance, repairs, renewals, depreciation. Do you know this concept, depreciation? Yes, very good. Salaries, and then these are selling salaries, salesman salaries. Here it is management salaries. Okay, so what sort of salary you might be having? These are all indirect expenses, yes or no? Yes. Below you have losses also. Yes, losses. So as per nominal account principle, what should you debit? Yes, very good. Expenses and losses. So indirectly, trading account all debit items, P&L account all debit items. I'm repeating again. Trading account all direct expenses, P&L account all indirect expenses and losses. Okay, all these will have debit balance. Very good. Now these are all indirect incomes. Sir, why indirect? Because my main motive is to sell the goods. These are all not my main motive. Discount received, commission received, I would call it as ancillary income. What is this? Ancillary, byproduct. Okay, similar to byproduct. My main motive is not this, but I'm getting this income. So indirect income, such incomes you have to book in the P&L account. Clear? These are all indirect income. So direct income, indirect income, all accounts will have credit balance. Clear? Here incomes and we have this gains also. Gain. Now as per nominal account principle, credit, sorry, revenue, or I would call it as incomes and gains. Yes? Credit all incomes and gains. So all these credit items will have credit balance. Clear? Any doubts till now? No? Finally, this is the balance sheet. Okay? This is the horizontal format. You will have vertical format also. Okay? Ignore about the format now. Yeah. Sorry. Sorry. CD in the sense? Acha. Balance carried down, balance brought down. Oh. Yes, opening and closing. So you might be, say for example, asset. Okay. You purchase some building during the year. Okay. During the year you have charged the depreciation. Say for example, you purchase the building for 1 lakh. Suppose depreciation is for 10,000. 90,000 is a closing balance. Yes. This is the first year which I have purchased. So building account will not have two balance brought down. Okay. Because during the year I have purchased. Yes. I don't have any opening balance. Agree? Yes. During this year, what is the closing balance? 90,000. So ledger account, you write by balance carried down. In the sense, you are carrying this balance to the next year. Okay? Carried down in the sense, you are taking it to somewhere. Carrying, you are carrying something. Yes? In the next year, 1/4/2024. Okay, 31st March 2024, you will have this entry by balance, not entry I would say, this is balancing. By balance, what is this? I'll show the ledger account. This is the trial balance. Here, this is the ledger account, yes? Yeah. Balance brought down and carried down. Suppose it is this account is having debit balance, two balance brought down. Yes. It will have debit balance, so at the end you will have by balance carried down. Understanding? You are carrying that balance to the next year. In the next year, I mean 1/4/2024, you will write again two balance brought down. Understanding? Brought down, you are bringing some balance here. Understood? Brought down is always opening balance, carried down is always closing balance. Understood? Carried down, CC, closing balance. Brought down is always opening balance. Clear? Here, balance sheet. Now, capital. What is this capital? Owner's contribution, very good. So owner's contribution, why it is treated as liability? Sorry, balance sheet? No. Do you think it is a liability or not? No, it is a liability. Why it is a liability? Yes, very good. As per business entity concept, business and owner are different, yes or no? Owner has contributed something to the business, so business has to repay it to the owner. So these are the books of the business, yes or no? So in the books of the business, you have to show it as liability. Business has to repay it to the owner. Understood? Suppose this business is borrowing some loan from the bank. It has to repay the amount to the bank, yes or no? Do you agree? So similarly, it has to repay to the owner also, as per business entity concept. Understood? So this is a liability. Reserve sum surplus is nothing but amount set aside from the profit. We will discuss this later on. Outstanding expenses. What is this outstanding? Okay, outstanding expenses. To understand this concept, you need to understand this accrual concept. Do you know anyone accrual concept? Anyone from online students? Okay, okay, very good. So we have not paid. When did you not pay? When have you not paid? Parallel, say for example, 1/4/2023 to 31st March 2024. You have any doubt? You're telling something? No issue. You can tell me. In accrual, accrual concept is nothing but you have to record the transactions as and when they accrue. Accrue in the sense, even if you are not paying something, you are accruing something, you have to record the transaction. Yes or no? What is the cash system? What is the accrual system? I'll explain. Cash system. Say for example, small kirana shops. Yes, they do not record transactions on accrual basis. Okay, they generally record only cash transactions. What is the cash transaction? Something is some payment is made, they'll record the transaction. Some payment they are receiving, they'll record the transaction. But accrual is not the case. In accrual, what will happen? Say for example, you have taken some building on rent. Okay, from 1st April to 2023 to 31st March 2024. Okay, you did not pay the rent for the whole year. Yes, yes, you have paid it on 1st of April 2024. 31st March tak this was unpaid. Yes or no? In case of cash system, you will not record this transaction, but in case of accrual system, you will record this transaction as outstanding expenses. Yes, because you have taken the benefit, you have availed the benefit, but you did not pay it. Yes, so what is the entry for outstanding expenses? Outstanding expense is a liability, but what is the entry for outstanding expense? Liabilities will always have credit balance. Asset will have debit balance. What is the entry? Entry will be expense account debit to outstanding expenses. Yes, this expense is of debit nature. This, if this is a direct expense, it goes to trading account. If it is an indirect expense, it goes to P&L account. This is a credit balance. This has credit balance. This is a liability which you have not paid yet. Yes or no? In this financial year, you have not paid. So you will record this as a liability. Okay. In the next financial year, when this was paid, what will be the entry? Outstanding expenses account debit to bank account, to cash or bank account. Understanding? Understanding? In the next year, you are not recording any expense because this expense is relating to previous year. This expense is not relating to next financial year. You are able to understand the difference here? Clear? So this is the outstanding expenses. Yes. In expense, you have another expense also. What is this? Expense paid in advance. Prepaid. Yes, very good. Prepaid expenses. What do you call it as? Prepaid expenses. What are prepaids? Same example. I suppose the rent for the per month is 1,000. I have paid 18,000. Okay. I have paid 18,000. So 12,000 is for this financial year, 6,000 is for next financial year. Yes or no? So that 6,000 portion is called prepaid expense. Understood? What will be the entry? expense account debit, I mean expense in the sense rent account debit, okay? Expense, I am using word expense to denote all the expenses, okay? Expense account debit 12,000, prepaid expense account debit or prepaid rent account debit 6,000 to cash or bank account 18,000. Understanding? Expense, this 12,000 goes to P&L. This 6,000 is an asset. It goes to balance sheet asset side prepaid to cash or bank. In P&L you will record only 12,000, not whole 18,000. During this year you have paid 18,000, but you will not record whole 18,000 in the P&L. You will not book whole 18,000 in the P&L. Understanding the difference? Clear? So expenses you have outstanding expenses, prepaid expenses. Similarly in incomes also you have outstanding income, or I would say accrued income. What is this? Accrued income you have earned but not received. Yes? Yes? Earned but not received. Receivable, yes. You can call it as receivable. Yes, asset. Okay? Then another one, income received in advance. What is this? Income received in advance. You have not earned, but you have received in advance. This is a liability. So these are 4 different accounts you can see in the balance sheet. Asset side you will find prepaid expenses, accrued income. Yes? Income earned but not received. Liability side you will see outstanding expenses and then very good. Income received in advance. You have not earned yet, but you have received. Understanding? You might be needing to pay it back. When the other person is asking you, you have to pay it back because you have not earned yet. Yes? Do you agree with me? Yeah. These are all the different accounts. So all the liabilities will have which balance? Credit balance. All the assets will have debit balance. Very good. So why I am referring this debit credit? We are talking about trial balance. Yes or no? We are talking about trial balance. Where is this trial balance? This is the trial balance. Serial number, ledger accounts, debit total, credit total. Yes or no? So all debit accounts, debit balance accounts, you will note down here in this column. Credit balance accounts, you will note in this column. Yes or no? At the end, you have to balance this both debit and credit. Ideally, it should match. Why it should match? As per which concept it should match? Sorry? You are correct. What? Dual aspect. Very good. What's your name, ma'am? Give her a big round of applause. Yeah, Tanuja. So, as per dual entry concept, it should match. Because every debit should have an equal and opposite credit. So, these are not matching. You might have done some mistake. Yes? Mistake can happen while recording the journal. Yes? Mistake can happen while balancing the ledger account. Yes? It can happen. I mean, total balancing part. I mean, recording part. Posting part, you can do mistakes. So, suppose in the entry credit sales 10,000. While recording only, you can write some debit as 8,000, credit as 10,000. Yes, that is one error. 8,000, suppose entries for 10,000, you have posted in the ledger account for 9,000 or for 1,000. 10 hat gaya. Yes, while recording, while posting to the ledger, while balancing the ledger. Yes, error can happen at any stage. That's what I want to tell. Yes, while balancing, while carrying forward, balancing ठीक किया लेकिन carry forward next year करने में एक जीरो एक्स्ट्रा डाल दिया, एक जीरो हट गया. While carrying forward also error can happen. Yes, So at any stage, till the trial balance, errors can happen. That's why I'm referring it as unadjusted trial balance. Where is the accounting cycle? Here. Unadjusted trial balance, yes. Then you will identify what are the errors and then you will pass adjustment entries. What are these? Adjustment entries. Yes. Adjustment entries is nothing but you want to rectify the mistake. Okay. You will rectify the mistake via these adjustment entries and then you will have drafted adjusted trial balance. Yes. Here the trial balance gets tallied because you have rectified the mistakes and then you will close the books, closing entries. Yes. And then you will draft the financial statements. Trading, manufacturing, trading, P&L balance sheet. Okay. All expenses accounts, all incomes account gets closed in the same year and goes to the P&L account. They are not carried forward to the next year. Only what accounts are carried forward? Only balance sheet accounts are carried forward to the next year. Understanding? Why? Trading account you will determine gross profit. Yes. P&L account you will determine net profit. That net profit will be added to the capital account. So what is this net profit? Net profit is nothing but profit earned by the business. Who will enjoy this profit? Who has to enjoy this profit? Ideally shareholders in case of a company, but in case of a sole proprietor I am talking about, the owner has to enjoy. Yes. So you will add this profit to the owner's capital. Indirectly, business is liable to repay the net profit also to the owner. So that's why that net profit will add it to the capital. Indirectly, net profit is also a liability. Clear? After adding, you will have liabilities. I mean the capital. I mean the liability side. You will have several accounts. Asset side, you will have several accounts. These balance sheet accounts only will be carried forward to the next year. P&L accounts all gets closed in the same year. Understanding the difference? Understood? Yes? This is the whole process. In between you have subsidiary books, I guess. Yes? Have you seen these subsidiary books? I would say ledger accounts, you can say substitute is called the subsidiary books. Ledger accounts, in place of ledger accounts, you use the term subsidiary books. What is this subsidiary book? Ledger account is nothing but an account, yes or no? Instead of maintaining an account in a single book, I mean different accounts in a single book, they'll have different books. What do you have? Separate books. Say for example, purchases, they'll have a separate book. Yes. Sales, they'll have a separate book. Cash, they'll have a separate book. Yes. You might have seen this cash book also. Yes. BRS cash book. Yes. Similarly, separate book for assets, separate book for liabilities. Yes. So indirectly, ledger is extended into subsidiary books. Clear? Clear? Trial balance and then financial statements. There ends the accounting part. Clear? Clear with the whole process? If you have any doubts, you can ask. I'll explain. What is the time? If you have any doubts, I'll explain. Tomorrow I'll start chapter number 2. Today I'm just summarizing the chapter 1. Okay? You have to do the sums in the first chapter. Try to do the sums. Try to do every sum. If you have any doubt, you can ask me. Okay? Once the classes are over, I'll not be there. So if you are doing the sums after the classes and you are facing some issue, then no one can help you. Yes or no? So it's better to do the sums when simultaneously with the classes. If you are facing an issue, you can ask me. Any sort of issue, you can ask me. Okay? Chapter 1, this is all about chapter 1. If you have any doubts, you can ask me. These are all the adjustment entries. We have this provision, yes, provision for bad debts. Provision for bad debts, that is one concept. Yes, provision. Provision for discount on debtors. These are all adjustment parts. Clear? Clear with opening entries, closing entries? Opening entry, I'll explain. What is this opening entry? All asset accounts debit. See here. क्या हुआ ये? All asset accounts debit to all liabilities to capital account. This is the closing entry. This is the opening entry. Opening entry in the next year. I mean, in the books they have to take all the assets because they are debit balance. They'll take all liabilities to capital. Okay, debit assets, credit liabilities, and capital. Understood? This is called accounting equation. I will cover that concept also. Here, see here. So this is the capital part, yes. These are all liabilities part, yes. Yes, these are all assets. Accounting equation is assets equal to liabilities plus capital. Okay, this is the accounting equation based on this balance sheet. Understood? Any doubts? Okay, that part has not been covered. Okay, no issue. I'll cover that part. Any other topics ma'am did not cover? You can ask me. I'll cover that concept tomorrow and then I'll go to chapter number 2. No issue. रेक्टिफिकेशन भी हुआ नहीं है, हाँ? रेक्टिफिकेशन एंट्रीज नहीं हुआ है. ऑनलाइन स्टूडेंट्स, एनीवन?
No, sir. No, sir.
Okay, rectification is also not done. Okay, provision for discount on debtors, that part I'll cover. Rectification I'll cover. Any other topics that did not ma'am did not cover in the earlier classes, you can ask me. I'll cover that concepts and then I'll go to chapter number 2. Huh? Only these two? BRS also. BRS also. Sorry? 1.6 nothing is covered. Trial balance also not covered. Huh? Sorry? So accounting for bad debts, provision for doubtful debts, provision for discount on debtors, provision for discount on creditors, all these topics are not covered. Okay. No issue. I'll cover tomorrow. Okay. From tomorrow I'll cover this from 1.6, right? From 1.6, huh? Okay. From 1.6 I'll cover. Before that, you know the weightage, right? You know the weightage of each chapter? Yes? Open the weightage page. First chapter is for 15 marks, yes? Total you have how many chapters? Huh? Not 9, I would say modules.
6.
6, very good. So first module is for 15 marks. Yes? Yes? Whole accounting part. This is regarding the preparation of financial statements. Till preparation of financial statements, it will be covered in the fundamentals chapter, first chapter 1. Okay, this is for 15 marks. And then second chapter is accounting for special transactions. Okay, this for how many marks? 10 marks. Third chapter is preparation of financial statements. Okay. Preparation of financial statements. This is for 20 marks. And then module 4, partnership accounting. This is for 20 marks. And then lease, branch and departmental accounts, these for 15 marks. Accounting standards, last chapter you have 6 accounting standards in your syllabus. 6 accounting standards, okay? That 6 accounting standards, it is for 20 marks. Okay? Clear? This is for whole 100 marks. You may be getting more marks in one chapter, less marks in another chapter also. That is also possible. Okay, because your paper will be given for 118 marks, including choice. Yes? Yes or no? Do you know the pattern of the exam? No. No. Okay. I mean, none of the lecturer in the group 1 has taught you the pattern of the paper. Okay, no problem. I'll teach the pattern also tomorrow, no issue. Okay. So, including you have one man, I'll take the pattern tomorrow in a separate class. Don't worry. But you have to see that in exam this pattern may be followed or may not be followed. Okay. So I'll target for only 60 marks. Okay, I'll target only this 20, 20, 20, 60. No. Okay. Majority they'll follow, but it may happen that in your exam, in your attempt, they may not follow. Okay. So better to have idea in all the chapters. Clear? Okay. Any doubts till now? I have 3 more minutes. Any doubts? In today's chapter, you have any doubts? No? Till this 1.6, okay? I don't know how many sums do you have here. Try to do at least one sum from each chapter, okay? At least one sum you will get to know what is the flow, okay? Try to do at least one sum from each chapter till 1.6, okay? From 1.6, I'll take tomorrow, okay? Clear? From 1.6, I'll take tomorrow. Okay, thank you.